This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's total fuel oil imports fell in 2025 after hitting a record high in 2024, as lower import tax rebates weighed on demand from independent refineries. Imports of fuel oil totaled 21.6 million metric tons, about 376,000 barrels per day, down 10.4% from 2024's record high of more than 24 million tons, data from the General Administration of Customs showed on Tuesday. China's demand for fuel oil typically comes from independent refiners, who can opt to use it as an alternative feedstock when they run out of crude oil import quotas.
Oil prices edged up on Tuesday, bolstered by a weaker dollar, while markets watched President Donald Trump's threats of higher U.S. tariffs on European nations over his desire to buy Greenland. Brent futures rose 15 cents, or 0.2%, to $64.09 a barrel at 0430 GMT. The U.S. West Texas Intermediate, WTI, crude contract for February, which expires on Tuesday, was up 14 cents, or 0.2%, to $59.58. The more actively traded WTI March contract gained 6 cents, or 0.1%, to $59.40. WTI contracts did not settle on Monday due to the U.S. Martin Luther King Jr. Day holiday.
Moving on to the top news in the energy sector.
China's crude oil imports from top supplier Russia fell 0.7% year-on-year in December to 9.33 million metric tons, or 2.2 million barrels per day, but hit the highest level for 2025. Imports from Malaysia, the largest transshipment hub for sanctioned Iranian oil, fell 37.9% to 4.14 million tons, or 0.97 million barrels of oil per day. Imports from Indonesia stood at 2.19 million tons, or 0.52 million barrels of oil per day, last month, down 13% from 2.52 million tons in November. China imported around 0.1 million tons of crude from Indonesia for the whole of 2024.
President Donald Trump has lavished the U.S. oil industry with favorable policies since returning to the White House, but his twin demands for cheap oil and energy dominance are increasingly colliding with companies' bottom lines. Over the past year, the Republican president has rolled out numerous pro-fossil fuel measures and offered strong support for U.S. oil firms abroad, a sharp departure from his Democratic predecessor Joe Biden's focus on combating climate change. Within hours of taking office, Trump declared a national energy emergency, opening the way to relaxed environmental rules and expanded drilling permits on federal land and in Alaska. He also quickly lifted Biden's freeze on permitting new liquefied natural gas terminals and sped up project approvals. Next, we have the top news in metal markets. Copper was rangebound on Tuesday, as investors awaited fresh catalysts to push the price in either direction. The most active copper contract on the Shanghai Futures Exchange closed daytime trading up 0.58% to 101,230 yuan, $14,543.50, a metric ton. The benchmark 3-month copper on the London Metal Exchange dropped 0.24% to $12,934.50 a ton as of 0700 GMT, still hovering below the $13,000 level.
Chinese exports of rare earth magnets to Japan in December fell 8% from November, when a diplomatic spat left market players concerned about future shipments, concern exacerbated by a ban Beijing imposed in January on the export of dual-use items to Japan. Outbound shipments from the world's largest producer of rare earth magnets to its Asian neighbor totaled 280 metric tons last month versus the 2025 peak of 305 tons a month before, data from the General Administration of Customs showed on Tuesday. Still, the December volume to Japan was 31.4% higher than in the same month in 2024.
We will now look at the top news in the agricultural sector.
China has bought about 12 million metric tons of U.S. soybeans, fulfilling a U.S. stated pledge to purchase that volume by the end of February, three traders told Reuters on Tuesday, after a late October trade truce spurred buying. As buyers shunned North American supplies amid a trade war, China recorded no imports from the United States for 4 consecutive months from last September, taking U.S. market share down to 15% from 21% in 2024. But the 12 million target was met last week after bulk purchases by state stockpiler Sinograin and state traders COFCO, which were the only buyers of U.S. beans, as private crushers continue to favor cheaper supplies from Argentina and Brazil.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.